Happy Friday, or is it? I think I said that a couple times this week. It's just after 3 p.m., March 4th. Non-farm payroll, bit of a non-event market, could care less. We are getting the flows like a systemic crisis is happening right in front of our very eyes. I think it's pretty safe to say market's still in turmoil. I, I do wonder what the weekend looks like. The markets are certainly vulnerable over the weekend. We could have either crazy amounts of negotiation happen over the weekend in crunch time to prevent this from getting worse and systemic, or we potentially have another nasty down because we are sitting close to some pretty big technical levels. I mean, we're almost at 500 on the SPY, which means we're trading 50.90 lows today at 50.73 on the SPX. Are we going to see 5,000 today? Is the market going to have another final hour that's rough and we end up closing near the lows, similar to what we did yesterday? We closed around 53.90 yesterday. And there's a decent level right around 5,100 if it kind of stays sticky to the end of the day. We had a huge level. There's been some talks of halting the markets today with that 7% circuit breaker. So, yikes. Anyway, here's where we're at. My portfolio officially turned red for the year. I'm down about 3.5% for the year, which obviously, considering the market's down 15 to 16%, it's not as bad, but I'm still not pleased. And selling a bunch of premium, took on some hedges. Those are looking up. I mean, look at this. SPY is down 17.5%. Woo. This last little bit, outside of that little Wednesday sell-off, this market is down just in this last stretch. This market is down 12.3% just in the last couple of weeks. So certainly ugly out there. Not fun. We are in free fall for 2 straight days. My question, of course, is does it get worse? Do we see? A couple of things from the technical side, which I think is interesting. We've got high, low, lower, high, lower, low. We did hit a fib extension right here. I did say, though, be careful that if we get a pullback, that's understandable. But this market may be destined for a previous all-time high around 480. It might even overshoot into this 450 zone. This could get very ugly very quickly. And, I urge anybody out there, obviously it's not financial advice, but I urge everybody to just, keep trade sizes small, manageable. Defined risk is probably your best friend right now. Keep taking your stabs, stay mechanical, stay systematic, pick your trades. I've talked hedges through the last 3, 4, 5, 6 months with some of my services. I specifically ran a master course on it yesterday, and I'm doing it this entire month. So I'm taking a little trade that is hopefully going to be, if we see another flush to the downside, I'm looking for kind of that immediate payout going into next week. One thing I was considering is we go back to the OPEX cycle for February to March in 2022, or I'm sorry, not 2022, COVID. This market flushed, 30 to 35%. I mean, this peak to trough was 36% in the S&P. And this happened within literally a monthly expiration to the next monthly expiration. So if you go from Thursday, the 20th of February to Monday, March 23rd, it's like you have that entire monthly cycle. So I'm wondering if this go around, these markets do operate a lot faster, and we can clearly see that this market is dumping hard and everything is down. You can look at sector performance today. You can look at the overall heat map today. Like I said, this has a bit of a feel like systemic issues. What is green today? Nike. Congratulations, Nike. You're up 4%. One of one today. Little old Lululemon up today, 3.53%. Lennar, interesting for home builders. DHI, home builders up. That's interesting. I don't know if this is because their interest rates are coming down with the 10-year dropping below the 4 handle. Ford is up a little bit. It's just crazy. Like in a sea of red, you have a couple little winners. There's Deckers. If you own some Uggs and Hokas, you better love that stock. It's up 5% today. If you like Nike, Nike's trading around 57. I sold a 55.50 and 55 and 50 put, I believe. Let me double check that for Nike. I have some exposure. Nike is, where's it at? Right here. 55.50 and 47.50. So it's down, but it was essentially a cash secured leap out to the end of the year. I thought I'd be willing to own it. I took a trade today on Delta. We're trading at 36. I put in to the end of the year a 23, 22, 21, and 20. The premium was so high in Delta at 132 IV rank that I basically sold puts around the COVID crash levels and collected $6.25. It's already up 66 bucks. Hopefully, there's a lot more to go. Let me just take a look at a couple things. So, look, heat map is just atrocious. This is 1 day performance. I have to take a screenshot of this because I guess I can wait till closing bell to see how bad it really gets. But if we go to 1 week performance, doesn't really look much better. 1 day, everything is down today. I'm curious. I wouldn't be surprised if the broader market advanced decline is probably less than 30% advancing, maybe even less than that. 1 week performance. Let's go to the world. This is why I said systemic. The world is red, right? You think that this rotation out of the US is going to be great and easy and just invest in Euro stocks or Germany or FTSE or China or Latin America. You're wrong, because the US showing, 16%, 17% down high to low, the world's going with it. And so this either is like a very aggressive reset to, come to terms with some type of trade agreements to start reestablishing some type of smoothness in the global economy, or we have severely disrupted what has been probably a malleable and repairable supply chain since COVID, right? I mean, think about how disruptive this was during COVID, and then everything was fixed afterwards, but it was kind of, not all one-sided, right? The U.S. got the big upper hand with the markets ripping the way that they did. China was still slow down post-COVID and really didn't start doing anything until last year in the fall, but everything is down. I mean, this is 1 week. Let's go intraday global performance. I mean, I'm going to take a screenshot of this because this is brutal. And then again, bright shiny star of Lululemon up about 3.97% today. But I'm going to post this for my Telegram channel. I think this is interesting. So, I mean, what's the aftermath here? I don't know. I mean, this has so many potential consequences in the next. I mean, it could be immediately in the next month or two. It could be over the next the next year and a half with midterms. I mean, I don't think people are going to forget this. I mean, the funny thing is, like, everyone's celebrating. If you hear people talking about, oh, the 10 years down to below 4%, that's great, right? That's what we needed. That's what the market needed. There's a bit of need for that, yes, but you also have credit spreads that are widening so dramatically. Look at this. This is your like triple A, triple B, triple C. This is not a good environment for anything. You want to finance, and you're all of a sudden starting to see these credit spreads are blowing open. That's not a good look. Like, you are losing liquidity in the market, which is a massive driver for investors. So, I mean, you can't have the celebration of the 10-year yield going down, because I said that if it's going to go down and it's going to go down sharply, it's probably coming with more pain in the stock market. And boy, I would say, you know, a little bit of pain goes a long ways. We did touch that four handle today down to 3.86. It's pulling back a little bit, but we've had about a 40 to 50 basis points drop since this little high March 27th. So, I mean, yes, I agreed. It's a good sign, but the Fed didn't flinch today. Jerome Powell talked, and it's still paused, and it's still the same. Outside of the markets pricing in maybe a different rate cut cycle, I don't think the Fed is going to do anything like outrageously as far as like the reaction to this market. So let's go to probabilities right now. So there's still a pause chance for May. Okay. There's still a rate cut pending for June with the highest probability by far. And then another rate cut for July. And then again, rate cut for September, not one in October. I literally saw this morning. It was pause and then 1, 2, 3, 4, 5. I think I saw 5 cuts on the calendar of probabilities this year. So right now it still looks like this is going to change. It's always going to change, but no cut for May, 1 in June, 1 in July, 1 in September, and possibly 1 in October or December. So right now the calendar shows about 4 cuts on tap for the Fed, likely going to be in the 25 basis points range. So if we go 25 times 4, that'd be lowering the official cash rate by 100 basis points again. I don't think that the Fed should be doing this at emergency rates. Okay, I really don't, because this was the adverse reaction when the Fed cut 50 basis points. The market did the exact opposite. This is the bond yields. So getting below 4 is important, but we need to see inflation going down still. We need to see all the inflation readings going down still. I don't know if anyone's going to actually call this a technical recession, but It certainly has the looks of it, or at least the starting point where Wall Street is pricing in bad things. Does this roll over into earnings, which rolls into job losses, which rolls into unemployment creeping higher, which rolls into the consumer cutting back? All these things can happen over the coming months. So all I'm saying is the market might have a faster cycle and we have all this pain right up front. The market may bottom, but the damage is being done as we're talking right now. So again, I'll try to be as clean and technical as possible, but here's the way I see it. Okay. So if we go high, low, lower high, lower low, there's still a fib down here around 4,700. I'm just going to say that could be my low, 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 low of this cycle. So I'm going to extend this out from the 4,800 level down to that fib around 4,700. Um, and if we have a current fib, which I have a plotted fib right here from this recent high to I'm gonna obviously modify this to today's low so far, and hopefully we'll stay above this 51 handle. I've got another trade running towards the end of the day, which honestly at this point, let me check my SPX trade. This is one of my daily profit plays, which by the way this week went 10 for 11 in winners. I'm super proud of that and happy with that. We've been just grinding like crazy all week, so that's cool. Let's go to SPX. This trade here. So this one is trading for, I'm going to put this down to an 05 debit, see if it'll close out by the end of the day. Otherwise, it cash settles for 55 cents. So far, so good. The market's, it's going to, I mean, we got 44 minutes left. The market would have to drop about 80 points in the next 45 minutes, which obviously it's possible. But I would say unlikely. That put side right now is sitting around a 7 delta. There's still about a 95% chance it finishes out of the money, which gives me my full 55 cents. So that would be a winner of 75 cents and a winner of 40 cents and a winner 55 cents in the day per contract. So not a bad day. So 70 and 40 and 50. So about 160 bucks per contract on SPX today. Not too shabby. Not too shabby. Again, if we hold above, I need price to stay here above 50.30. That's my line today. Hopefully we just kind of chill. Hopefully we chill. Anyway, trade war heats up. Damage is being done. I'm not saying it's going to be over, but it's down from yesterday's close to today's low. That's a 6% dip. We've got 5.2 across the board on S&P. SPY's down nearly 5%. Q's 5.13. Dow 4.6. Russell down to 4.72. We're officially in bear market territory on the Russell. Volatility index. Let me go back to this chart here. Let me go SPX on this chart. Very good. I'll watch that level. Don't break lows. Okay, I'll get back to this chart in just a second. Let's go to VIX. VIX is pushing up near the highs of the day. Again, if you're a premium seller, there's some really, really juicy premiums out there, but man, just be careful. Bitcoin going down. I mean, how bad? 84. I mean, honestly, oh yeah. Jonathan's not going down. Yeah, I mean, that's super interesting. You got to wonder how or why. I mean, I don't know if this is some master plan from Larry Fink and BlackRock, if this is just institutions just holding and not dumping because this is a dollar alternative play right now. I don't know. And honestly, like it's kind of nice to have some built-in resiliency because the only thing that's working for me right now is bonds and hedges. Defensives are fine, but bonds and hedges are pretty much my plays. Gold had a big sell-off today. Silver's been battered in 2 days. Gold is down hard today. Gold's down, 2.7%. I still think gold has a lot more room to run to the downside. So I'm not shorting gold. I'm just waiting for opportunities to scoop up some discounts. Silver, I am probably looking to see if I can scoop up some silver, but it's going to have to be at a very attractive level and probably just doing some defined risk option trades, either in SLV or in SI futures. But yeah, Bitcoin not going down is kind of impressive. MicroStrategy is actually up on the day as well. That's impressive as well. So yeah, I mean some little shiny tidbits. Let's go back to I took a screenshot of the world map. Let's go to the 1 day when it's done at close today. Home page. Wow. 10.7% of stocks advancing, 87.6 declining. That is I mean, this thing has bright red too. This is nasty, nasty, nasty. Bright red on the day. Yeah, first time we're uncorrelated with BTC. Yeah, one of the first times. One of the first times. Again, is it a lagging correlation. Is Bitcoin showing resiliency today and then it dumps over the weekend? Does something happen? I have no idea. If there's resiliency in Bitcoin, that honestly does, I think, make for an interesting conversation around, well, why didn't it? I mean, I was pretty convinced that Nasdaq going down would bring Bitcoin with it, but Nasdaq looks a lot different, right? Here's the Qs. Yikes! Qs from high to low, we might even push 20%, 21.62% high to low on Nasdaq. Wow, 21%. So we have crossed into that like bear market territory. SPY, I think 17% from high to low. So there's a 17.6% dip. So, like I said, this either gets another week or two weaker because we go out to the 11th and the 17th. If there's more pain ahead, there's still some room. I mean, this could drop into the 500 handle. This could drop into the 480 handle. That would be kind of my near-term worst case scenario. Obviously, that's this one I'm playing for technically. If I go back into this fib here, I'm curious on the correlation. If we get back down to there's a pretty good confluence here between this 4,500 handle and possibly this 4,600 handle in case we don't stop at this previous all-time high. But that being said, it's like I would expect a pullback. I would really expect a pullback first, either an attempt to fill this gap that gets faded again. This bear market is not done clawing. I'm pretty sure we're not going to see the lows as of yet. And I sent this out for my crash insurance masterclass, but I'm looking to see, just in case this market has like a Sunday open in futures and it opens up further down, then I want to see if I can take advantage of a short-term play that we might have some really nice like out of the money plays that pay 3-1, 4-1, 5-1, something like that over the next couple weeks. So that's one play. The other side is if we get back to this level, I'd say this area is a short for me to hedge the market. So I'm going to short again, and I'm going to short again, and even short again with defined risk. Now that means I'm also going to be trading my way through this. So if we do have a pullback, then my P&L fluctuates quite a bit, and what is down 3% right now year to date could be back up to 5, 6, 7, 8% positive. I was up about 9% right there. And if we have another pullback and another chance to de-risk, I could also take a lot of trades off the table for some profit, and I will be looking to do that. Okay. All right. So there's a lot going on today. I get it. What's the overall temperature out there for everyone? All you watching out there? We doing okay? Are we panicking? Are we hating this? This is definitely one of the wildest things. I watched this video today. It's I think it's Tim Knight from Tasty. He's been like a perma bear for the last like 12 months, and he's been one of the only traders that's just like, I'm loving this market. This is awesome. Blah blah. Like he's been super excited. But he said even since trading since 1987, this is the third wildest thing he's ever seen, and that includes the Black Monday crash in 1987. So to put this right up there with some of the top three things in a 40+ year career or 40-year career is pretty impressive. And I've been trading for 25 years, and this rivals Great Financial Crisis. It echoes it at least, and certainly, I'm wondering how fast the cycle is going to be. So COVID, for example, I mean that little 30-month window was insane, and the whole world was coming to a halt. So it's nuts to me how self-inflicted this feels. It's like we didn't have to do any of this. And I get it. Like there's problems in the US and there's a debt cycle and there's a liquidity air pocket and the Fed needs to see. I get it, okay? But the way this was handled, this is now looking like a systemic problem. Right? And I mean, if anyone out there is financial advisors, you got to take the old Series 7 or the Series 65. Systemic risk is something that you cannot diversify away. Non-systemic, you can diversify. You've got gold, you've got other stocks, you got indexes, raise and lower volatility, you take defined risk, you can diversify away non-systemic risk. But systemic risk is there is a freaking problem, right? Houston, we have a problem, and that's what these last 2 days of price action looks like. Was there an official halt today? Was there an official halt today in anything? And usually what happens is there's like 15-minute halts. So I think we do 7%, 13%, and 20%. And we do 15-minute halts at those times. Let's see here. I get it, Christian. Yep, that bear put spread makes sense. That makes sense. Okay. And look, I appreciate everybody sharing. I mean, look, it's not easy. I was up 30K yesterday for year to date, and now I'm down 113 grand. So I've had a big flip. Obviously, today is down. I mean, I know I have some exposure. That being said, I do have some protection. It's not offsetting everything, but I am right now up around 45K. I'm up $45,000 in futures contracts with hedges. I am also, I think my gold positions have taken a little bit of a hit. So CEF is up $2,000. So I'll just do it up here. So I've got about 33,000 in hedges right now that are still running and still open. I'm not closing them out yet. Another 2,000 in a gold play. GLD is taking a bit of a beating today, but I'm still up around $15,200. Okay. And my MO positions are still up 20 grand. I'm just looking at, anything that's playing defense right now. PHYS is up around $2,700. And let's see here. Pfizer's down to 23. That son of a b. Rocket is actually up on the day. One of the few. Silver is still up. Silver's down, actually. Son of a biscuit. Well, that's frustrating. And then I've got some SPY hedges. I closed out a trade on. I had a synthetic short that I put in yesterday during my live session for daily profit play. I closed it out for $12,600. And I'm going to have some losses today in XSP. I had some expirations today on April 4th. And I might take a little chunk of losses on XSP. The market shot through a lot of the forgiving levels that I was after, and it is what it is. But I'll still trade. I'll still focus. There's a crazy high amount of premium here to be watching and waiting and selling. So anyway, of this downward move, okay, I've got about $85,000 running right now that's protecting. Now that's not realized. That's not closed. But my point is, this is at least helping me fight the good fight, continue to trade, keep my cash available, which I still have about 1/3 of this account available in cash. Okay. So that's not a bad thing. I deployed about $300,000 to $400,000 in capital these last couple of weeks as the market's been dropping. I've been selling more premium. So anyway, John says they say buy when down, but no one is going to. Well, that's not true. I mean, the smart money will take some nibbles, and that's the thing is like I'm not backing up the truck and saying that this is long term buy and hold levels. I'm not there yet, but I do think that taking nibbles will be fine. I mean, and when I say that, I mean this. If I take a stab right now at a 45 to 60 day option, okay, and all of a sudden my level is, I mean, I sold an option on the SPY that's only out about 50 days, and I sold a $430 put. $430 put. This would have to drop another 15+%, and from current levels, we'd be down 30%, and that would have to happen in the next like 30 some days, right? I mean, 430, the market would be down about 29, almost 30% to the point, right? Is that gonna? I mean, sure, it could happen, but then the question is, if it bounces here, I make money on that trade. If it flushes down here, bounces here, I make money on that trade. So I think at the very least, this market is likely going to have some type of, weekend coming to Jesus talk, and maybe there's a little bit of improvement. Maybe the narrative changes. Maybe there's messaging coming out of, DC next week. I got to wonder how many people are just absolutely furious right now with the U.S. and this administration, because this went from what looked to be a nice, healthy rotation into a systemic risk. And that's a very different market, right? So, I don't know. I mean, was this part of the master plan? I think it wasn't, but I'm just trading through it. I mean, I'm not in the closed door meetings. I've got no insider information. I'm just trading through it. So we'll figure it out. Any capitulation signs so far? This bleeding must be ending. I mean, if you talk about capitulation, this certainly feels like it, but I don't know if this is the end. I mean, and here's why I say that. Look at the chart. Okay, the chart as far as capitulation. What's crazy about capitulation is usually there is a technical level. And the one thing that makes me nervous about this is the only thing we're touching here from today's price action is this August low of 2024. That's it. Why would that be support to hold this entire market in place? It could be a short-term bounce opportunity, but I don't think this is anything more than a pullback to then sell off again. So I see this as, if this gets worse, we've got another flush. We come into major technical support levels, and then we start to see the bounce, and maybe it's maybe it's like one of those rips and then it comes back and tests the lows, then it rips up again, and you got a crump and handle or some type of bullish pattern, or it's just straight down, straight up. I don't know, but I will say there probably will be forces sooner than later that are likely going to try to curb the negative effects of whatever this is going into, whatever this kind of systemic risk is showing right now. And I would imagine that somewhere between this 500 to 480 zone to even into 460. I mean, just look at my chart. That resistance and that resistance. If we don't have at least a halt there, I would be really surprised. At least a bounce, right? At least a bounce. Those are two very key levels. That was a big pullback in 2023. That was our all-time high. So I could see that window acting as some pretty major support of this market is as far as capitulation goes. I could see this getting a little bit worse, but the question is how. I mean, basically this market shed 12% in a couple of weeks. Like when we had this pullback here, this pullback to current price has been down about 12% of the 17%. That is pretty bad, right? If you trade trend lines, we touched one from COVID on ES. Let's look at it. Let's go ES. COVID. Not quite. It's close. That's the COVID low that I see on ES. So connect the die here from 2020, connect it to the bear market low in 2022, connect it here to the October 2023 correction. So based on my trend line, that still has some room to fall, and all that does is line up with this previous resistance. Previous resistance there, previous resistance there. If there's another flush, and we'll find out next week, like Sunday night when the market opens, is futures opening way red? And if it is, we're going to face another giant gap to the downside in the markets for the U.S. Open, maybe. Okay. Will Trump tax cuts bounce? Well, that's the thing is cutting taxes in the wake of a recession doesn't really freaking do anything. I mean, that's what's so crazy is like, this is not a surgical act. This is like amputation. That is not just, given the U.S. This is the U.S. opening up the competitive doors for every other country to either repatriate funds and leave the U.S. or force them systemically to basically hemorrhage like the U.S. is doing right now, and everybody does it, and then we have to have some type of kumbaya, let's work this out. Which I don't think this administration or the world for that matter is in the place to have friendly ally trade relationships. Like it's so crazy. So anyway, for the ES trade based on the COVID lows, we're not there yet. Previous highs, I can see that around that 4,800 zone. That's a lot of my hedges. I will be watching closely because if this is hitting that 4,800 handle on my charts, then I will be looking at this trade getting closed off. Oops, right here. So this trade getting closed off, this trade getting closed off. This one's just added in. I've got a SPY trade in. I've got a couple screenshots here. I had a collar trade in today that was up 730%. Not a bad trade. So I put in a collar trade on my SPY shares for $1.70. I closed it out for $11 today and made about 750% gain on that, which I'm pretty happy with. So even the little old collar trade where I buy a put and I sell a call is helping me lower the cost basis on shares that I own, protecting my portfolio, and then I've got hedges in all over the place. So anyway, use contract adjusted. Oh, I gotcha. Makes sense. All right. This trade now, if we got I'm going after a 5-cent debit to close out I'm going to try to get this one closed out here in the next few minutes. Price is responding nicely off that 5,100 handle. So I'm just looking for this to decay another 5 cents. This trade, this was a broken wing that's not going to get filled. I'll cancel that. So 235 for 40 cents, 75 for 5 cents. So 40 and 70 and another 50. Not bad on the day for SPX for 3 for 3. Overall, pretty good week. But again, it's peanuts compared to playing defense and playing protection. So let's talk pure charts again. It's a little bit easier to read this with fibs on ES because there's no gaps, but it still works the same way. We're coming right down to that 618 extension. Even though this market is nuts, look at how this behaves. We pulled back to the 38250 zone. We came right down to the 1271618 extension. If I put in another fib from this recent high, to low, okay? If we have a pullback, and this is what I don't know. Either we have another flush lower, okay? Either we have another flush lower to just price this in so violently and so rapidly that it's still a bounce, you know? Or this is a new cycle of high to low and the market pulls back. There's a 236, 382, 50, 618. I could see this market pulling all the way back to a, 50 to 786 zone somewhere in here. So I could see the market pulling back into here, but that would be an aggressive rip for next week. And look, no, even if the market is up, I mean, this is not exaggeration. Even if the market next week is up, I would say, 4%. If it's up 6%, that is a bull rally in a bear market, in my opinion. There is very little right now that convinced me that the bulls are back in full fashion. All this will help me do is watch my P&L grow and let me get out of some of my trades that I'm in for all the selling that I've been doing for all the premiums. So, I'm going to take a screenshot of this P&L and share this over the next week or two, because this is kind of I mean, I was down about 110 grand, 115 grand worst case today. Let me take a screenshot of this. So just to show, options can be a little nuts, even though I have defined risk. But the time has to settle. Implied volatility can change. I'm just going to take a screenshot of that as a reference. So if we go up, I will have another big chunk of shares or a big chunk of trades like I did here for profit. So if this market goes up, I will be able to close out probably hundreds of trades again, de-risk, raise some more cash, be back. I'm about 1.1 million in cash right now to deploy, and I might be able to raise that back up to 1.3 to 1.4 if I'm taking out some profits if we have a retracement into some of these pockets. So that's not a bad thing, and I will then start recalibrating for, okay, am I looking to get hedged again, hedged again, hedged again? Because I probably will, and I don't think this market is done, because the way that I see this going, they halted MicroStrategy. Did they? When? How far was it down today? I mean, it's still trading, right? MicroStrategy is still trading. It's still trading, so it's back in action. But Bitcoin has been pretty resilient. Anyway, to be determined. So check out the October 2022 to October 2023. You looking ES again? October 2023, right there, to October 2022. Okay. Okay. You went. That's even steeper than mine though, right? Like again, if you're going contract adjusted, that's even steeper than mine. We broke that. Oh, I see what you're saying. Okay, so you connect those lows. We're not quite there yet, but I see what you're saying. It's close. But I mean, again, it's like, what about this low? We're kind of at it. This low, we're getting close to it. This previous all-time high, we're getting close to it. I mean, that trend line doesn't have to be perfect, but the combination between that trend line and this historical resistance, I think that would make a big deal. I think that'd be a big level of support. All right, let's see what else is going on here. So, bull rally in a bear market if we're lucky. Otherwise, more pain to the downside as this market continues to price in. And is it going to be an overreaction? Maybe. I mean, I don't think in this market that as a U.S. investor for the last 30 years, I mean, shit, the last 90 years, if you just bought dips, and I know they're not pretty, I know there's been 30, 40, 50% corrections in these markets, and it's always easy in hindsight, okay? I get it. But you have been told and rewarded very, very well for buying the dip. And I don't know if this is a deep enough correction and scary enough move that the buy the dip investors are now waiting. I don't know. I still think that this is like the perfect opportunity to, if you're scared, you're going to miss out. If you're paying attention, you'll have an opportunity to catch some near-term gains. And I look at this as we either continue to flush lower and get all the pain out of the way as quickly as possible, and then build this thing back into a recovery, or we have more of the pullback, into this area, and then the market has one more leg to go. And the reason I say that is because the one thing that really hasn't changed is price to earnings and forward operating price to earnings. Okay. So we have not really had Q1 earnings drops yet. Given the state of this market right now, given the drawdowns, given the uncertainty with tariffs, I can't see forward guidance being very optimistic. And this drop for 9 to 10% was not pricing in anything with bad earnings, or at least an earnings compression. Maybe now it is because tariffs are out there, maybe. Um, but we have yet to see what companies are reporting. And that's where this kind of inside baseball, so to speak, all the narrative can shift very aggressively because maybe there's exemptions, maybe there's negotiations, maybe there's all sorts of different nuances to what we just rolled out with this like amputation of the global trade economy, right? So I don't see this being a good thing. I think this is going to be an earnings compression. I think things in guidance look lower. And then the next piece, so this would be like step one is going to be, and I've talked about this like for the last couple of weeks. Step one is going to be the Mag 7 rotation. That happened. That's what this was. This initial beginning was the Mag 7 rotation. Number two is tariffs, which accelerated the move. Okay. And I think this was probably seen as now worst case scenario of what's happening right now with how this was rolled out. Um, I mean, there's an argument to be said that the numbers that came out were the same from ChatGPT. If you plug in ChatGPT based on, uh, I don't know the exact formula, but if you take like the trade deficit and try to tariff it back to go to zero, like ChatGPT gave you the exact same numbers that we just rolled out on Liberation Day, which is kind of laughable if that's all the thought that went into it, versus the reality and nuances. So tariffs, okay, it's happening right now. Then we have earnings. Okay, earnings probably not looking that great. Forward guidance likely to be very disrupted. Then we have jobs, right? We've got jobs, and then we have the consumer. And there's a lot of pieces here because the consumer is not just does everybody have a job? Is everyone still working? Do we still have a fairly tight labor market, right? If it's loosening, if people are losing their jobs, if there are layoffs, consumers going to stop spending. There's the slowdown. And then you've got consumers with delinquencies and consumers with rising debt and consumers with living beyond their means. And all these things come to a screeching halt. So it could be this like perfect snowball of a cliff that we're rolling off of right now. But the market is usually forward thinking, right? The market's usually forward thinking. So this was getting priced in. This accelerated the move. This is now potentially what is happening currently is all of this disruption from tariffs and the rotation that's already been seen is now companies are likely going to have lackluster earnings. And therefore, this is the big drop on top of the kind of systemic risk revenue right now. Labor market today, I mean, non-farm was mixed. We had, well above the 130K forecast. It was 200 some thousand, but the revision was lower from like 150 to 110 or 150 to 113. Unemployment ticked up from 4.1 to 4.2, right? So not problematic yet, but there are showing reports of rising consumer debt problems. We have more delinquencies. We have, I mean, has anybody seen this that like Klarna and Affirm and like buy now pay later is partnering with like fast food restaurants and partnering with like Walmart, where I mean you're putting food down on a buy now pay later, and these rates are criminal. I mean, the fact that a company can get away with 20 to 30% interest rates on people that are just trying to scrape by, because that's who's not paying their, like, if anybody's not paying their bills, it's people that just can't afford it, you know. So anyway, I mean, it can get worse, but the way this market priced it in is like it's thinking ahead, and so if all this stuff is getting priced in worst case scenario, that's why we could see it going down further before this thing kind of rock bottoms, and then we'll figure out where next is, right? All right. So anyway, just my thoughts. So on the technical side, I'd say if investors are lucky to see a bit of a relief, then next week the market pulls back into some degree of a 30, 38, 50, 61, 70% zone. I'd be excited to take a little chance to buy those dips. I don't think it'd be that difficult, to be honest. Waterfall income is a classic strategy for that. And I'm going to do it. So like next week, I'll take some dips and we'll take advantage of it. We'll see the appreciation. We'll go after it, make some wins, hopefully. If it goes further to the downside, we still have time in the trade. That's fine. But we'll talk about that more on Monday. Okay. So this is trading right around 5 cents debit. I mean, come on, man. We've got 16 minutes left. Give me my 5 cents debit. If I go lower, I'm just going to let it close to cash settle, which is end of day, which is fine too. But I guess at this point for the next 16 minutes, I can probably just remove it and just let this thing close out automatically for 55 cents, and I'll take the winner. So hopefully this closes out at 0 in the next. This would have to drop 109 points in the next 16 minutes. I don't think that's going to happen, but I'm not counting my eggs before the hatch. All right, what else do we have? Let's go top down. So we have, this is insane, like absolutely insane. Take a screenshot of this just because it's one of the wildest bear markets I've seen for an intraday move. Worldwide, it's really nasty. But I'd rather be living through it and trading through it, remembering it, learning from it, than not experiencing this. Like these type of crazy times will make you a better trader. You may not believe it until it's all said and done and the dust is settled, but this will make you a better trader. If you are seeing huge, massive drawdowns with this market, you will learn how to take less risk. And I've said that for years. It's like you have to trade small in order to survive. There will always be good opportunities in these markets, always. Okay. But when you trade too big and you only give yourself, 10 swings at bat, 20 swings at bat, 100 swings at bat, that's it. Like it's a make or break. I want thousands and thousands and thousands of repetitions here to make some money. So I'm never a big swinger. I'm usually not a swing for the fence trader. I'm usually, base hits with a high percentage win rate, and I trade probabilities, and I just stick to that plan, and it's done pretty well for 20 plus years. So it's like you will remember this, and like I said, if you survive this stuff, you'll be a better trader. And it's punches in the mouth like this that make you think, what could I do differently? What you don't want to do is panic, sell everything, and then hedge at the bottom and then think that's the way to do it because you're just taking the wrong cycle. This is, we called the tops early in the year. We expected a correction. It's now accelerating into further downside. I have the hedges out that could pay more profits and help me protect my portfolio. I'm taking bites. I'm seeing crazy high volatility, which historically speaking, at these type of volatility levels, selling premium is a very good winning strategy because the over implied volatility, the overstated move is typically way beyond the actual, right? And I say typically because it's not a guarantee. This market could still have another spike up in VIX and have another day higher, and it just makes people even more uncomfortable. But that's what's going on. Okay. So we will watch in the coming weeks. Daily profit play, we've been crushing it. Waterfall income, I look forward to trading with everyone next week on Monday. We've got obviously a massive discount in the market. We are taking some heat on some of our XSP trades. That is fine and understandable. But if this market does respond in any way, we can mitigate some of those losses. We'll have some fresh ones in here to take some profits at. So that's not a bad thing. So we'll be position sizing accordingly on Monday. And double ups, we had a win this week. Newsbreakers, they didn't trade. I'm actually waiting to see where these Q1 earnings are starting to print here in the next couple of weeks. So newsbreakers will be pretty active, and then in the coming 3-4 weeks, we'll have a lot of trades to filter out. And then my project options ads, I'm gonna be live with you in the next 12 minutes. And my crash insurance, we did that yesterday for a nice 2-hour masterclass. I put 2 trades on today. You're probably getting a better feel than I am if you waited a little bit. And like I said, I gave you a video on why I'm doing it. I'm basically looking to see, if this market is going to open up on Sunday with another blow to the market to the downside and futures just rips lower. That's why I want to put on the hedge for the near-term gain. I'm putting about $500 on the line for a $2,000 to $3,000 winner. If I don't make all of that in one quick move, that's understandable. But even a $500 risk to turn in to $500, $1,000, $1,500 of profit, I'll take that profit. I don't need to go all the way to max profit and hold it. So let's see what happens over the weekend. Otherwise, if we pull back next week, like I said, it makes some sense. Technically, we did hit some highs and lows, high, low, lower, high, lower, low. So a fib here at Friday's low. Do we spend the week pulling back? Possibly. Very possible. Okay, so let's see what Sunday to Monday looks like with the futures market. Just be aware of your levels. Zoom out. Look at your bigger picture moves. Let me go to one more chart here. I've got a weekly macro harmonics. No, let me go one more workspace here. We also put in a zigzag pattern on the daily and the weekly, which is another sign of looking for a low. It can change in real time, but it's looking for a low. And where at? Well, look at my demand levels, look at my previous resistance, same levels I'm talking about around that 4,800 handle. If I go to this workspace it's a Mighty Macro, I think is what I built it out to be. This one, let's go into, so not the DXY, let's go to the SPX. So we are back down to, again, oversold conditions on the 14 and 21 day moving average. This is interesting on money flow. We're still seeing money flow making higher lows for right now. I'm really curious to see what that looks like on Monday. If this is, further down and revisiting the lows, or if this is an opportunity for slightly, maybe some real money's coming back in at these recent lows. Okay, MACD has crossed over again. We're getting a bigger histogram. Let me check and see on some of the cleaner charts, like this one, for example. So here's my 21. I mean, we're getting close. This is SPX weekly. Okay, daily we hit some oversold conditions here. This is the daily chart. So this is SPX daily. Momentum is made a new low, and that means there's no disagreement yet. And we made a new low on RSI. This indicator on the bottom is ATRs. Okay, the ATR is jumping because volatility is higher. So we are at some fresh lows on the weekly. Check this out on the weekly chart. We are at a spot where rarely do we see oversold conditions on the relative strength 21 period. So if I go to this macro space on the daily, let's go to the weekly. Okay, the 14-day weekly has hit a low. All right. So again, it's obviously nothing is guaranteed to say this is the bottom, but we are once again hitting some technical levels where it does look reasonable to think that the market can pull back. Also on a weekly time frame, just taking a look at the moving averages, the weekly chart falling back into like a 144. This 144 moving average, this 200 moving average. It's interesting how that corresponds with, if you go left on the chart here, right there near that high. That is amazing, actually. So if we hit the 200 moving average on the weekly time frame, that's also coinciding with the previous all-time high back in 2021, 2022. Okay, and then this high, kind of the same area. If we, were to test or touch that 200 moving average and then bounce off of that, that could be pretty good. Now, I'm just going to throw it out there to play kind of devil's advocate to my own analysis. I'm hoping that this, as a COVID low, is the 1, 2, 3, and what we are experiencing right now is a wave 4. If this is a wave 4 and we do actually catch some bottoms here and catch some support, the wave 5 would still make all-time highs. Now, I'm not saying that happens this year, but I'm saying in the bigger picture, as long as we don't do any insane damage below this weekly 200 moving average, I mean, look at how critical this is going to be. You're talking about COVID lows to the bear market in 2022, to the pullback in 2023, and that trend line is right there, fast approaching, right? So, I mean, if we can survive this and see the market not do too much damage below 5,000 or 4,800, then perhaps this market can work its way back at least into some equilibrium. Doesn't have to be all-time highs, but equilibrium. But I would be genuinely concerned if we are going, all right, we have 8 minutes left. I mean, just freaking hold your horses, would you? I would like to not see a fresh low in the next 7 minutes if possible. I forgot my train. I was going to say, if we, you can see the damage done. If we take out this trend line, if we're trading like open space down here, I mean, it's hard to get excited about any bull market, because if we pull back, it's like, is that resistance? And we sell back off, and then we spend time building up around here with tons of chop, and then the market has to figure out, can it really justify higher highs? I mean, it could be a long time, but if we at least show this area offering some support, then the market at least is holding the trend. And that will be really, really critical coming into the next, I mean, honestly, I'd say the next even couple of weeks, really, really important. Okay. Nice. Dean closed out daily profit play, $260. Another one this afternoon for 142. Great day for Dean. Good stuff. Option contracts across the board being devalued. What do you mean, Richie? Are you talking some of the premiums changing? I mean, I did notice a big change in IV. So IV was up to 100 and some, and now it's down to 70. SPY is not MES, but SPY. SPY is still up to 124. This will likely get changed over the weekend. So I'm trading for a 5. Let me check this one out here. I'm probably taking on a little bit of risk in this stupid SPX trade. That 50-30 is my level. Right there, it's up about, good Lord, man. It's still trading for like a 20 to 25 cent debit right now, and I'm trying to basically like settle in here. I mean, it's got 6 minutes. It'll settle as long as price stays above 50-30, which is another 50 points. I mean, come on, dude. 6 minutes left. I mean, it's still pretty low in the option chain, but it's a 5 delta. I mean, if we just have yep, I'm saying we're watching this market kind of move a little bit. Don't be a turd. Trying to revisit those intraday lows. Chart alarm going off. Q's crossing 424. I closed out that hedge a while ago. I don't think I have much exposure on the Qs outside of a put. Yep. So Qs. Oh shit! I got assigned shares on the Qs. When? What? This happened overnight. What trade was that? 5:30. Ugh. Well, that's something for Monday to figure out. Oh my God. All right. Well, I've got this is part of a 1111 trade at 5:35. This trade got assigned. All right. So that's so stupid. All right. Well, the reality is my put is gaining. It's I can manage that trade for Monday. I'm not going to do it today in the next 4 minutes, but I need to write that down. So QQQ got assigned overnight, and the nice thing is I've got the buying power to still manage it. Like I can still hang on to this, but I've got to put in place at 5:35. So I was assigned at 5:30, and I still have a put at 5:35. So that is up. I mean, what's kind of nice about this trade is even right here, I'm up about $9,500 on these puts, and for these assignments, I'm down about 10 grand. So I'm looking at like maybe taking $100 to $200 loss in that position. That's the beautiful thing about a hedge. So anyway, I got to manage those for next week. QQQ 1111. I've got the 535 long put. All right, that'll be on the to-do for next week. Okay, 50.72. We got 3 more minutes. Yep, not looking good for the close, that's for sure. So SPX, this little tiny guy right here, up about 40 bucks. Let me see if I can just close this thing down before the end of the day. 5 and get me out. No bid price. Well, we'll see if I can get exited where I want it to debit. It's trading right there at it. We've got 2 minutes left. Still about 43 points clear of it. Still trading about a 2 delta. I mean, we'd have to have like almost a flashy move to get me in threat here, but not holding my breath. So 58. Friday, April 4th. So guess what? Everyone's going to remember Liberation Day. Everyone's going to remember Liberation Day and what happened right after. So I think 2025 April Fools, you're going to remember it. This definitely goes down in the history books as I wouldn't be surprised if this plunge is not top 10 or better. This has to be one of the sharpest moves we've seen in a long time. This probably rivals. I mean, yesterday was one of the worst sell-off days we had since COVID. Today we've got to be down about the same. I mean, 6% the SPX. The halt is at 7. I mean, we're we're close. John says, with all the news coverage and the crash over the weekend, caused people to panic, pull money out Monday, make it. I mean, it's possible, right? Everyone could panic and run. And I'm telling you, like, yeah, that would be the capitulation, the flush that I think sets up for amazing short, medium, long-term opportunities to just kind of trade through it. Like nothing about what I see right now is I'm going to put in this for a long-term level. That's not how I operate. I'm looking to make income like this week, this month, this quarter, this year, but I do it in base hits. So sure, I mean, people can dump and panic and whatever, and maybe that flushes lower. So we closed it 50.75. I'll get this full profit here. I'll let that cash settle. Cool. So I get my dollar. All right. So I get my for the day, $160 per contract on the day for SPX. That's good. I'll take it. And 10 for 11 for the week's not bad. Still had some wins, close out some hedges, but yeah, ugly close. Not looking great P&L. I'm down about 4% now, I think. Down about 4.8% year to date. Now these are open. There's a lot of fluctuations here. There's going to be some changes in pricing, but my next batch is okay. So if we have risk on in any way, and not it's not even risk on. It's more like do we have the recovery? Do we have any type of near term rally? Do we have a bull rally in this bear market? Just don't ignore these big levels. So this area to this area, I could see as a critical spot on the charts. Coming into that 144 weekly, coming into that 200 weekly, coming into this previous all-time high. If there's any integrity left in the bull market, this is where it is. So, I mean, that is a quick, nasty cleanse that still may not be done. We're down about 17, almost 18%. Nasdaq's down over 20% if we close near the lows today. So I think there's a lot of people that should be rethinking how they unveiled this Liberation Day rollout this week, because the market certainly didn't take it well. And the only silver lining would be, yes, the US 10-year has dropped. Hooray, we're back down to a 4% handle. This still is going to take time to lower, and if anybody is holding a bond portfolio, I mean, let's think about this for 1 second. I'm going to jump over to my Project Options Edge class. Bonds, I mean, up today at 94, down to 92.85. Interesting. It's up on the day, but I mean, fractionally consider where it was up. But let's say that I put $100,000. Okay, I've got a 100K portfolio. All right, and I did 60% in SPY, so that would be 60K, and I did 40% TLT for 40K. All right, and I want to look at the year to date and see how this portfolio is doing. All right. I don't believe in the 60-40 portfolio. I'm way more active of a manager. I'm way more diversified than that. I trade all sorts of stuff, but I'm just curious from the year. If we look at a 12-month chart, okay, where is the TLT for the year? Okay, so when you start this year's trading, and this is like literally after a 1, 2, 3, 4 year bear market, by the way, which equities obviously helped offset because the last 4 years things have been fine. So equities actually doing really, really well, as this is down, 44% in 4 years is freaking terrible in bonds. But this year, oh my gosh, your bond market is up 5%. Ooh, 5.34%. Sign me up. Okay, 5.34%. And we are down peak to trough, and it's not year to date, so it's not year to date. Let's be fair. Let's come back to the charts here in just a moment. Let's go. Oh my God, my charts are so messy. This is your high to low for the. I mean, we closed right at the freaking low today, man. 17.4%. So 60 times. Oh, actually, that's not year to date. Sorry, that's the high to low. Let's be fair. So for the year, we're still down double digits though. This market is down about 14%. Not much of improvement. So 60K times 0.14, $8,400. All right, so 51.6. So your current balance is going to be 51,600 or 51,600 in equities, and your little 5.34%, 42,136. So 42,136. Okay, now that total 93,736, right? If you started out with 100 grand this year, so if you have a 60-40 portfolio, you're down 6.2% instead of being down 17% or 14%. So yes, it's an improvement. This is, and what's funny is this is a long time justified, like, see, I told you that you got 60 in the equity in the bonds market. I mean, you really don't. But this is the first time in 4 years that the bond market's actually acted like a safe haven. The bond market's been in a horrible drawdown. It isn't a horrible drawdown. It could be, I don't know, and maybe this is the big tide where the bond market does actually perform and perform quite well. Maybe, maybe not. I'm not holding my breath on the bond market being my savior of the year, but I guess this is manageable, right? You're down 6.2% instead of being down 14% for the overall equities market. Way less volatile. Financial advisors are probably happy to share, like, you're only down 6.2% and the market's down 17% from high to low. Doesn't mean it's just, finally the bond market started to show up and be something of a safe haven play, right? So just thought that was interesting. You sure your options trading training link? Yeah, sure. Yeah, it's right here. So quick options. So it's on my Vimeo on demand here. It is through my Vimeo page. It's just a $27 option course. If you like that, there's a full course for $497. If you buy any of my services with lifetime membership, I give that course away. So if you like to save on that $500 course, you can buy one of my services where you're trading live with me, either once a week or with an alert service, or trading with me every day, or just buy the practical options. It's like 4 to 6 of my favorite strategies in the quick guide, and it's 13 of my favorite strategies in the full course. But there you go. You're welcome. Thanks for asking. ES volume on the session right up there with the previous major market pivots. Yeah, I know. And and I also saw the AAII sentiment was the third highest in history. I posted this earlier in the week. So I mean, we are starting to see like extreme fear. You can probably go to CNN Fear and Greed Index and see it. Ding, 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 ding. Extreme fear. Right? Again, this is something to be watching for. Could a bottom happen? Yep, it could. But it wouldn't be a bottom that's like long lived. I think this is a bottom that would be great it just feel a hell of a lot better to have the market just give a little sense of relief. Okay. But going to the daily, and I got to switch gears here to my other class. But look, a little relief rally, is something I would still be looking to fade. So if we are going, back up at all, there's gaps. It's in this area. I'd be looking to short it again. And the bears could be salivating at that. If we don't, and it flushes down, and this is another kind of systemic nasty day, then next week might open up blood in the streets, get down to one or two more flushes. But something wouldn't surprise me if we like pivot here by the 17th of April and we start to go up afterwards. That wouldn't be a huge surprise. So anyway, got to go. Okay, I got to jump. Project Options Edge. Traders, I'm going to jump in that classroom. We're in Zoom. We're going to go for maybe 20, 30 minutes. We've got a couple trades to review. And thanks for being here, everybody. Happy Friday. Have a great weekend. And let's buckle up and do it next week. All right, see you. Bye.